Everyone, and welcome back to Forex Scope. Today, we're diving deep into the exciting world of GBPJPY, bringing you a super focused analysis on the 15-minute and 1-minute charts. If you're looking for the latest insights and potential trading opportunities, you're in the right place. Before we jump into the charts and uncover those price movements, make sure you hit that subscribe button and the notification bell so you never miss out on our daily Forex breakdowns. Let's get started and see what GBPJPY has in store for us. The support zone is identified by a clear period of consolidation and multiple rejections of lower prices. Specifically, the price range between the high of 202.931 and the low of 202.756, spanning from timestamp 176-287-6800 to 176-287-8600, demonstrates significant buying pressure. During this interval, the price repeatedly tested this lower boundary, failing to break through and instead bouncing back, indicating strong demand at these levels. The presence of multiple candles interacting within this tight price band, characterized by notable lower wicks and the overall inability for the price to sustain a move below this area, suggests a well-established floor. This area acted as a significant level where buyers stepped in to absorb selling pressure, preventing further downside movement and creating a stable base for potential upward price action. The repeated interactions and the inability of sellers to push the price lower are key indicators of its strength as a support. The resistance zone is defined by a pronounced area of selling pressure and price rejection. Between the timestamps 176-292-7200 and 176-293-3500, the price attempted to move higher but encountered strong headwinds within the range of 203.125 to 203.391, with the upper bound touching 203.391. This price band saw multiple failed attempts to break higher, characterized by the formation of upper wicks on the candles, indicating that sellers were actively pushing the price back down from these levels. The inability of the buyers to sustain a price above this zone, coupled with the consistent rejection, points to a significant supply area where sellers are dominant. The price repeatedly tested the upper limit of this range, only to be met with selling pressure that pushed it back down, establishing a ceiling for upward movement. This resistance level is notable due to the repeated price action that confirms sellers' control within this particular price corridor, preventing any sustained bullish breakout. The formation of this resistance showcases a battle between buyers and sellers where sellers ultimately prevailed in keeping the price contained. This support zone at the lower end of the price range between 203.089 and 203.119, marked by timestamps from 176-298-4620 to 176-298-4800, shows clear price action characteristics. The price found significant difficulty breaking below this level, with multiple candles showing hesitation and rejections, indicating strong buying pressure originating from within this specific price bracket. The lowest point reached within this timeframe was 203.012, while the highest point was 203.119, illustrating the trading range where buyers stepped in to defend the market. This area acted as a floor, preventing further downward movement and suggesting that traders were willing to accumulate positions at these lower valuations, leading to a consolidation pattern before a potential upward move. The presence of several candles interacting with this zone, including one with a significant lower wick at 203.012, underscores its importance as a historical buying interest area. This accumulation phase suggests that the price is likely to find demand here if revisited. This resistance zone, located between the prices of 203.227 and 203.237, identified by timestamps from 176-298-2520 to 176-298-2580, represents a significant barrier to upward price movement. Within this observed period, the price struggled to break decisively above this level, with the highest recorded price reaching 203.267 and the lowest at 203.225, indicating a clear ceiling. The repeated interaction with this price range suggests that sellers were actively defending this area, pushing the price back down and creating a zone of supply. The significant high of 203.267, followed by a rejection and a lower low, clearly demonstrates this selling pressure. The formation of candles within this vicinity, with prominent upper wicks, further reinforces the presence of sellers limiting further price appreciation. This area is a critical level where the supply outweighs demand, acting as a strong indicator of potential reversals or pauses in any bullish momentum. The Fibonacci levels indicate a potential upward trend as price 1, 203.169, is lower than price 2, 203.184, suggesting a bullish sentiment. The recent price action shows consolidation within a tight range, with a tick volume indicating moderate activity, but not an overwhelming push in either direction. The Bollinger Bands are relatively narrow, reflecting low volatility, but the price is currently sitting near the middle band, with a slight upward bias in the most recent candles. The prior 15-minute resistance at 203.361 and support at 202.855 provide broader context for potential price targets. The 1-minute resistance at 203.227 and support at 203.119 are more immediate levels to watch. Given the current price hovering around 203.159, we anticipate a move towards the 1-minute resistance, possibly testing the lower Fibonacci resistance at 203.184. Should this level be breached, the price could retest the 15-minute support near 202.855 before potentially resuming an upward trajectory, or it could consolidate further before attempting to break higher towards the 1-minute resistance zone again. The overall market sentiment appears cautious, with traders likely waiting for a clearer signal. The upward bias suggested by the Fibonacci sequence, combined with the price's proximity to previous resistance, suggests a cautious but potentially upward movement, with retracements to the identified support zones being a possibility before any significant bullish continuation. This zigzag pattern reflects the typical price behavior in such consolidation phases, where smaller fluctuations occur before a more decisive move. The analysis prioritizes the immediate price action and Fibonacci indicators while acknowledging the broader support and resistance levels as potential turning points or targets for this predictive price path.